Now, Bitcoin has dropped below 75k, Ethereum is struggling to hold support levels, institutional money is leaving crypto ETFs, and one geopolitical story is suddenly dominating the entire market. So what exactly is going on? And should crypto investors actually be worried right now? Now let me break down everything that has just happened. Now the first thing investors need to understand is that institutions are still pulling money out of crypto. So over the last 2 weeks, crypto ETFs have seen more than 2.5 billion outflows, and that's becoming one of the biggest sources of selling pressure in the market right now. Bitcoin ETF demand has been one of the biggest drivers of this entire cycle. So when those flows reverse, traders actually pay attention. So Ethereum isn't escaping either. So Ethereum ETFs have also seen continued outflows, showing that institutions are becoming more defensive across the board as well. And what's interesting is that this isn't really a crypto-specific problem. The biggest driver right now appears to be macro uncertainty again. So over the last several days, the markets have been reacting to renewed tensions involving Iran and the United States. President Trump has continued discussing potential negotiations while also warning that Iran needs to move quickly toward an agreement. Now, as you guys know, markets hate uncertainty and investors don't know whether we're moving toward peace talks or further escalation. And whenever uncertainty rises, risk assets usually are the first thing sold. So we've already seen oil prices react, stock markets become more volatile, and crypto has been caught directly in the crossfire. So now currently we are trading just under the long-term support level that we have in the daily time frame. So some investors and traders actually do think we are going to come to about 66k before we have a higher push towards the upside. But we are still in a very nice position to be continuing that move towards the upside. But I feel like right now we need some kind of catalyst to obviously continue pushing that price back and make traders and actual investors inside the market feel safer and wanting to put money and capital into the market. So right now it's a 50-50 situation whether we go for the upside or continue coming even lower. So like I said, we're one news headline away from something big. So we are currently trading near the multi-week lows, but the important thing is that this isn't just a fundamental breakdown. What we're seeing here is a combination of the ETF selling we've been getting, macro uncertainty, and leveraged traders being forced out of positions. So yesterday we actually got $1 billion in liquidations. So yesterday Bitcoin fell to a 5-week low of 72,800 as fresh geopolitical tensions from the US airstrikes on Iran triggered a risk-off wave across the financial markets. The sudden drop caused nearly $1 billion in total liquidations across the broader cryptocurrency ecosystem. So the hit we saw yesterday was actually pretty insane. So right now, crypto isn't being driven by crypto news, it's being driven by institutional flows and the macro headlines that we've been getting these past couple of days. And now, as for Ethereum, might actually be a more interesting chart right now. Ethereum has slipped below $2,000 while ETF demand remains very weak. So what's concerning right now is that Ethereum hasn't shown some resilience as Bitcoin during the volatility. You can see we were aiming to stick within this resistance and support level, but you can see we've broke through it heavily. We had some consolidation in this zone, some rejection from this day, which was the Saturday, and then a big push towards that downside. So Ethereum and ETF lows have remained negative, and traders are watching closely to see whether 2000 can continue acting as support as we have seen here. So if Ethereum loses that area decisively, it could become the next major source of a weakness across the broader altcoin market. So what should crypto investors actually pay attention to over the next few days? So there are 3 things. Number 1 being the ETF flows. If outflows begin slowing down, that's probably the first sign institutional sentiment is improving. Now, the Iran headlines. Now, this is a very important topic. So progress or tensions increasing will likely continue impacting risk assets. So therefore, we'll see a move towards that downside continuing. And now Bitcoin's ability to reclaim 75k. if buyers can push that price back up to that level, market sentiment could improve very, very quickly, and then would potentially be looking towards that 78k level, as we have kind of bounced off that major support level that we had on that daily time frame. But obviously, until then, that remains a market being driven by caution rather than excitement. So realistically, this is kind of what we are looking at right now. We could see a move back up to the upside, so at 75k, and then we would kind of need to clear that 77, potentially coming all the way back up to, let's say, 83k. So currently, there is a slightly more liquidity in the upside. So we have 136, 104 and 150 million, just under 76k. Right now, the kind of level we are aiming for would be about 75.7k. So if we get to that level, then we can definitely be aiming for around 78k. So the biggest takeaway is that crypto isn't crashing because of major industry problems. Right now, investors are simply nervous, worried, and well, I would be too. And until institutions actually stop selling and macro uncertainty calms down, expect volatility to remain high over these coming days. So I recommend right now you guys be very, very careful, but I will be updating you on what happens in the upcoming days. So make sure you hit that subscribe button so you don't miss out a single part. Now, before I let you go, let me tell you about Evedex. Now, Evedex is a platform I have been using for many, many months now. Now you can trade crypto, stocks, and in the near future, we are adding Forex into the exchange. Now, another cool thing about Evedex is that it's fully decentralized and there is no KYC verification needed. Now, the link for that will be in the description below, so make sure you guys check that out. Now, as always, hit that like button, it will be greatly, greatly appreciated. And as always, I'll see you all in the next one.